Ladies and gentlemen, good day and welcome to the Tiger Logistics India Limited Q3 and 9 months FY2026 earnings conference call hosted by Rick Capital. We have with us today from the management Mr. Harpreet Singh Malhotra, Chief Managing Director of Tiger Logistics India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. Before we proceed with this call, I would like to take this opportunity to remind everyone about the disclaimer related to this conference call. Today's discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risk that our business faces that could cause our future results, performance, or achievements to differ significantly from what may be expressed or implied by such forward-looking statements. I now hand the conference over to Mr. Harpreet Singh Malhotra, sir, for opening remarks. Thank you, and over to you, sir.
Thank you, ma'am. Thank you so much. Good evening, everybody. This is Harpreet Singh Malhotra. I'm the Managing Director of Tiger Logistics, and I welcome everybody to this investors call. I'm happy to talk to everybody today. I think the business results or the financial results for the quarter three are already in front of everybody. So I just wanted to brief you that we had a good quarter in terms of the development of new businesses. What we are seeing is that though it was quite a turbulent as far as the export business is concerned because of the U.S. tariffs and overall geopolitical situation, even because of the business constraints in the Gulf region. And overall, it was, from the business, from the EXIM business, it was not a very great year, because of the geopolitical reason. But in spite of all these headwinds, we were able to do good volumes, and the volume is up by 9% quarter to quarter, and almost close to for year on our year, if we have to look at the business volume, that is also up by close to 50% year on year. And we were this increase in volume primarily has been on our future growth engines, which we have adopted few years back, which is firstly working in the renewable sector, which is the Tigreen vertical for us, which is doing very well, especially in the renewable and the solar sector. And also, deep selling in the import sector, which is now giving us good results. And of course, keep on continuing in the present old businesses of the company, which is in the auto sector and also in the government sector. So I'm very happy that the overall volume of the company is growing quarter to quarter and year on year, because and which also establishes that the business is growing, and the dependence on a particular sector or a particular vertical is also reducing. So we are now all our verticals are doing very well, and that is showing in the increase in the volumes in the TU's business. There has been a small dip in the overall top line. That is primarily because ours is a cost-plus model, and the freights in this quarter have been the lowest ever. So we had the lowest ever freight levels in last few years. So this quarter has been the lowest levels of freight. So our top line, which is the revenue, is a direct indicator of the whatever are the freights which are prevailing in the market, because as you know that we all work on the cost plus model, and that is what is reflecting in our total turnover for this quarter also. But I am very happy that we are registering good growth in the volume numbers, because the freight levels are keep on fluctuating. But what is important is our business penetration and our business growth, which is important. All businesses where we have ventured into in last few quarters and years are doing well, starting with Tigreen and also Qbox. Qbox is a slightly, it is taking time. We have almost completed 1 year, but whatever are the expected numbers, maybe we are slightly. Maybe we were more, the expectations were more, but we are, it is not on the same lines as we were expecting it to be. But still, it is the overall vertical is breaking even and giving some profits. But maybe as we move on, because it is a LCL model, it will take some more time to develop and some more time, to really catch on to the overall full container business. But yes, other sectors like Tigreen and old businesses of ours are doing very well. And I think we've had a good penetration in the reefer pharma sector also. That is from the up north region, where we had, 6 months back, we had opened our big office in upper north region, covering the pharma sector of Punjab and Haryana and Himachal belt. So that has started giving us good numbers, and especially on the pharma sector. So we are exporting good numbers of containers today to various parts of the world in this pharma and chemical sector. And we expect that, area to grow further. Moving on, on the renewable sector, I think our presence in the business is growing each day. And and our today we what we were a year back, today we are a very formidable position today, where we could be one of the top 5 service providers in the solar sector. I'm not talking of the total business as logistics, but in the solar sector logistics, yes, we could be in the top 5, top 7 service providers. So overall, our business is growing. We are hiring more people in this sector, in this vertical, so that we get more specialized in our handling. So we are very bullish about the coming quarter, where a lot of activities happening, especially when the solar companies are looking at a big capex in next 2 quarters, and there'll be a lot of plants and machinery which they will be importing. So we are very bullish about handling logistics for them, and we've already catered for the required bench strength to handle that business. So I think overall, the business is looking set. Maybe with this U.S. trade lane, U.S. business getting settled, the tariff matter getting settled, and other business factors are also now softer, and so we can expect some tailwinds in coming quarters, and expect the business to go further. So I am very happy, about what we are doing, and I'm very happy as to what are the new businesses which we are targeting, and hopefully we will continue on the growth path. I only pray that the freights get better, so that everybody can see better turnovers and better revenues in coming quarters. So overall, business is good. God's been kind, and we are doing well. The financial hygiene is also in place, and we are working very closely in receivables, in getting our payments in time. So we'll be glad to share more details in coming quarters. But as of now, things are looking good, and we look forward to good growth, good business in coming days. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wishes to ask a question, please press star and one now. The first question is from the line of Abhijit Rao from VP Capital. Please go ahead.
Hello. Hello, sir. Thank you for the opportunity. First of all, sir, congratulations on good set of numbers despite the current geopolitical issues. We have done a great result. So my question is on the revenue. I can see that the revenue is we have done good, but on the volume in the air freight there is a slight decline. The cost plus model is what you talked about. I understood, but I want to understand this air freight revenue volume decline, effect of volume decline on the revenue.
So traditionally, we are not a air freight company. We are a sea freight business company. Our focus, the product which we handle, are all engineering, auto projects, solar panels, windmills, all those big projects and engineering goods. But air freight is our, I would say that it is one of the products where we are not really solely, dependent on our growth. That is more of a product which is there in place so that it can complement our main sea freight business. Air freight business decline is primarily because of the tariff issues and Europe business going down and the tariff issues which are happening. So people were not buying especially the high fashion goods and garments and similar kind of products which move primarily by air. So that was the reason for this decline in the air traffic. Few customers, which choose to export to the US, are not, they did not export anything because of the tariff issues. So that has impacted the air freight business. But that is very, very negligible for us. So we are not really worried about that. And I'm I'm happy that that will start again now. And I'm more happier that the tariff issues are settled and even the Europe is looking settled. So we are looking forward to some more business.
Understood, sir. And sir, on the green portfolio side, our Thai green vertical and the recent hydrogen MOU with Russia. So how do you see these two streams evolving? Like, what is the role?
Thai green is doing very well. Thai green is doing very well for us. We are very bullish. The volumes are growing continuously. It is contributing more than 40% to our total revenue, and we expect it to grow much further. So we have big plans for the Thai green product because under that vertical we are doing all solar logistics. On the hydrogen, we are not doing much in that. We are going slow because that involves huge capex. The market is still evolving. It is not matured at all. So we are still evaluating the market, and we are going slow on that product. And also, since we don't want to work thinly on various things. So because solar is doing good for us, we want to focus on that. Auto is doing good for us. Our old conventional businesses are doing well for us. So we want to focus on them and reach a more more respectable numbers and more numbers where we're in the top 5, top 3 category, and then focuses on new business. So that is our policy, and that's what we're gonna do.
Okay, sir. So understood. So Tigreen is our major means concentration on it will be on the solar and renewable on the Tigreen, and
Correct.
hydrogen is what we are exploring and
Yeah,
making
it
it.
is on the exploratory mode, so we are holding on to that. We are not
So
investing any
any
big money in that.
okay, yes, sir. And sir, on the this stock price, recent the changes in the stock price due to this all geopolitical issues and revenues. What is your view like the uh, uh, on the future of the uh, on this line?
I have no control I have no control over the stock
No,
price.
no. So
That
I
is
want to
totally.
understand just that the what particular road milestones we have to we can track on the Tiger, so
So if
that
you
we
see,
can.
the biggest milestone is that year on year, the volume is growing by 52%, which is the biggest milestone. And from last quarter to this quarter, the volume has grown from by 9%. That is also in the times where there has been overall a very sluggish international business. So that is the biggest milestone. And what is very important is that whatever are our which were our future growth engines in past 2 years, they have been very well established and very well set, and now they are giving good revenue numbers. So I think we need to work more closely in these sectors, deep sell in these, and then move on to the next one. So I don't want to just pick up any particular vertical and start focusing on that and not achieving any pole bearing numbers on the other vertical. So from our side, we are doing well. So the milestones which I mentioned, volume is a critical one. Our penetration in the solar industry is another one. That is what is important for us.
Thank you, sir. Thank you for such clear explanation and all the best.
Thank you.
Thank you. Participants who wishes to ask a question, please press star and one. Ladies and gentlemen, we would request you to please press star and one to ask a question now. The next question is from the line of Anshu Oza from an individual investor. Please go ahead.
Thank you for giving opportunity, sir. My question is Qbox. So how does the LCL model help you build a more repeat stable customer base compared to FCL?
Qbox, as I had mentioned in my opening remarks, is now an year-old product. We have broken even in that. Though we are not making any big money, that is a market. Sometimes it takes time. That is more to it is a B2B business where we are catering to small, medium-size freight forwarding and logistics company. So that model is there. The idea is to have all products in our kitty. So that is one of the products. But yeah, we've been always been a full container load company, and we always have dealt in with B2C, business to client business model. But this is something where we wanted to always have, because you must have all products in your kitty. So that was the reason to start this, and we are happy. We are gaining traction each day, and we are happy that in coming days this will also start making good money.
Okay, sir. Thank you, sir. And the second one is, sir, on profitability, should we think on LCL as a higher margin business, or is it similar to your blended margins in the near term?
LCL, as we move forward, could have better margins, but as of now, I think my bet would always be on full container FCL business only.
Okay, sir. Thank you, sir.
Thank you.
Thank you. Participants, please press star and one to ask a question now. The next question is from the line of Roop Betela from Volvi Private Limited. Please go ahead.
Can you just give me guidance? Is there any strategically you're looking more to grow vertical or just the organically only at this point in time?
No, we are very open. Thanks for a good. It's a good question. We are open to any inorganic, acquisition which we have, go through that inorganic way also. But unfortunately, we've not been able to get any good company.
Candidates.
We were very keen. Sorry.
Good candidates, you mean to say, acquisition side?
No, good companies to acquire, not yeah. More, whenever we are looking to acquire a good small or a medium-sized logistics company, we are, we want them to grow along with us, but we've not been able to find any good, asset which we can say that okay, yeah. But we are open.
You're looking only domestically now, or the same sector, or do you want to the other verticals also of the logistics side?
No, we are only looking at somebody who's in the international logistics. We ourselves are not present in the domestic, and we don't want to get into domestic logistics. Okay. So we are looking at only at companies who are doing international freight forwarding or logistics.
Okay, got it. Okay, thank you.
Thank you.
Thank you. Ladies and gentlemen, please press star and 1. Anyone who wishes to ask a question, please press star and 1 now. As there are no further questions from the participants, with that, I now hand the conference over to Mr. Harpreet Singh Malhotra for closing comments.
Okay. Thank you so much, and it was nice talking to everybody. As I mentioned, that coming quarters are looking very bullish for business, and I thank everybody for having trust and faith in us. And I'm sure in coming days the company will be registering good growth because we are moving on a very steady growth path. And we hope that everybody will see that and experience it. Thank you so much for joining in. Thanks.
Thank you. On behalf of Tiger Logistics India Limited, I conclude this conference. Thank you for joining us, and you may now disconnect your line.